Welcome, everybody. My name is Christian Ludwig. I'm a Senior Vice President of Communications and Investor Relations at DEUTZ. Today, I would like to give you a quick rundown of our full year 2022 numbers. But first of all, please have a quick look at the disclaimer at the beginning of the presentation. 2022 showed a strong performance in a volatile environment for us at DEUTZ. We had new orders which were roughly on the same level as last year, with a plus of 1% at 2.03 billion. Book-to-bill ratio stood at 1.04. But more importantly, our unit sales, especially in the classic engines part, grew significantly by almost 13% to 181,249 units. And that is also well reflected in our revenue growth, which grew by almost 21% to 1.95 billion. As you can see, we also had some positive price mix effects to get that revenue up to that number. And that is also reflected in our adjusted EBIT. With a growth of almost 52.2 million to 89.4 million, the adjusted EBIT margin came in at 4.6%, a doubling of the previous year's 2.3 percentage points. And this was driven especially by our classic segment, where the EBIT margin grew by 3 percentage points to 6.8%. On the back of these strong numbers, we are going to propose a dividend of 15 € per share to our annual general meeting at the end of April. We also have set new medium targets for 2025. Revenue is supposed to grow to more than 2.5 billion, and our EBIT margin is expected to be in the range of 6 to 7%. Beginning of this year, we also unveiled our new DEUTZ strategy, where we focus on the classic DEUTZ, the green DEUTZ, and the service DEUTZ part of our business. I'll come to that in a minute. And also, at the beginning of this year, we announced the alliance with Daimler Truck. Here, we will be taking over 2 engine platforms in the range of 5.1 to 15.6 liter displacement, which will enable us to have a very modern engine platform going into the next decade. But first of all, a quick rundown through our strategic thinking. The basis for our way forward is this market and technology perspective. As of today, we're selling around about 200,000 engines in the below 4 liter and above 4 liter category. We believe that these engines will still continue to grow in the next couple of years before, due to the transformation in our markets, the number of engines explicitly running on diesel is going to decline. But even by 2050, we believe there will still be a certain proportion of our business which will be running on diesel engines. But as transformation of mobility is important, we believe that a large part of our current engine portfolio will be replaced by adapted combustion engines. They will be running on hydrogen or on E or syn fuels. But that means that still in 2050, we should have a similar number of engines that we produce, which are still a combustion basis technology. And on top of that, we see a strong growth in alternative drivetrains like electrification, potentially also fuel cell. And this is especially valid for the smaller engines in the below 4 liter class. Based on these market assumptions, we have come up with our DEUTZ strategy. In our classic business, we want to increase our strong performance and also work on consolidations. And in the green part of the business, we want to build an ecosystem with the relevant products and technologies. And the supporting basis for both of these segments is going to be our service part. We want to continue to expand our profitable service business around the world. Taking a deeper dive into our classic DEUTZ, 2 main levers that are supposed to help us improve our performance. Improving performance overall, meaning making more efficient use of our capacities, simplifying our internal processes, and optimizing our portfolio. Thereby delivering the performance and becoming an even more trusted partner for our customers important for us. The second lever is the consolidation path. We actively want to exploit the opportunities presented to us by a consolidating market, and we will focus on targeting acquisitions and takeovers in order to continue our growth. Our overall goal is to become a top 3 producer of non-CAFM combustion engines by 2030. And some proof points of this, on the performance side, already in 2022, we were able to increase our profitability also thanks to a market-oriented pricing. We had some various inflationary drivers impacting our raw material costs, being energy prices, logistic costs, production costs, and we reacted quite early already in February of last year to tackle these challenges. We announced that we need an 8 to 12% price increase by the end of 2022, and today we can say we were able to achieve it. On average, we achieved a 10% price increase across the board of our customers. And also in 2023, we can give you a positive outlook, especially for the engines below 4 liter. We have started a fixed volume approach end of last year already, and we were able to discuss with a lot of our customers a certain ratio of fixation, which really covers 70% of our business. So very well positioned for 2023 as well. And on the consolidation side, I already mentioned it as one of the key highlights of the year. We were able to announce a cooperation with Daimler Truck end of January. We are taking over the IP of the medium-duty engine generation of Daimler and also will be selling the heavy-duty engines in the off-highway segment with the next emission level starting in 2028. This cooperation allows us to tap into new customer groups. Especially for the MDEP engine, we will also be able to sell it to on-highway customers. And the future-proof architecture of these engines gets us a proven modern platform that can also be used for additional development, especially looking into the hydrogen engine part. And finally, Daimler will become a stakeholder of DEUTZ with a 4.2 stake that ensures that they basically trust us that we are a good partner to ensure that their engines will have a future going forward. After the ramp up is done, which will take probably 2 to 3 years, we expect that the mid-triple-digit million euro range of revenue will be an outcome of this cooperation. And on the green side, this is guaranteeing the future of DEUTZ. We are building on the existing capabilities we already have invested in the past in Torqeedo, in Futavis. We have shown the first products of DEUTZ, and we are already in pilot projects with our hydrogen engine. But we also need to explore future market opportunities. We need to develop a market-oriented and systematic approach, as well as pursuing M&A and partnerships where necessary. The goal is to create the right structure in the ecosystems, make sure that we have the right setup for our green business. Over the next 3 years, we intend to invest more than 100 million into our green business to be ready for the transformation when it kicks in. And on the service side, also very important, because this is the foundation for the growth in both green and in classic. Our growth targets has now been redefined. We're looking to achieve 600 million in service revenue by 2025, up from 500 million, which was our previous target. We achieved 450 million in 2022. So this is a strong target that we have given ourselves, but we believe it is possible. 3 levers to that. First, we're going to push inorganic expansion. Already in 2022, we acquired South Coast Diesel in Ireland and Ausma in the Netherlands. And we will see more acquisitions down the road. We'll also continue with our organic expansion. Last year, we launched DEUTZ Deutschland as a local service dealer in Germany. We'll also continue to open new TPCs in the US, and we'll continue to ramp up our proprietary service network. And finally, we will address new areas of growth, identifying demand for the service in green and expanding into new sales channels and solutions. Based on our Dual Plus strategy, we have defined a new guidance for the fiscal year 2025, new midterm guidance. We want to achieve a revenue growth of more than 30% to 2.5 billion at least. And we want to increase the service revenue, I mentioned that before, to 600 million. Our adjusted EBIT margin should be coming in the range of 6 to 7% by 2025. Now, I'll take you into a deep dive on our 2022 numbers. We talked briefly about the new orders, up 1% to more than 2 billion again, a record number for DEUTZ. And if we look at the unit sales, overall, we increased the unit sales by 16.6%. That includes the DEUTZ Classic engines as well as the Torqeedo engines. Classic alone grew by 12.7%, and we had another significant growth at Torqeedo. On the revenue side, we were able to increase revenues by almost 21%, 1.95 billion. Here you can see that we had a positive price mix effect that helped us to grow revenue stronger than unit sales. If you look at the average sales price of our classic diesel engines, it grew from 7,300 euros roughly to 7,700 in the course of the year. So here you can see the effects of our market-oriented pricing policy. Orders on hand stood at 773 million at the end of the year, which gives us visibility of roughly 7 to 8 months for this year. When we look at the revenue distribution in detail, you can see that in our core market, Europe, including Germany, which is roughly 58% of our sales, we were able to grow almost 20%. But even stronger was our performance in the Americas. With a growth of 50%, this by far was the market with the strongest pull for us. A little bit disappointing last year was the development in Asia Pacific, especially due to the performance in China. But Asia Pacific overall still were able to post some small growth. Our activities in China declined year over year. But now, after the COVID-19 lockdown is over, we hope that China will slowly recover in the course of this year and hopefully return to previous growth levels there as well. If you look at the revenue breakdown by application, what stands out is the stationary equipment and the agricultural machinery, which grew by 49% and 33% respectively. But also in our strongest end market, the construction business, we were able to post a 17% growth. Material handling with 25% was also a very strong performer which also helped us overall to achieve our goals. And service, I already talked about. Of course, it cannot, in an environment which is as strong as we currently are, service growth is always a little bit behind the new engine growth. So we had a small decline in the service share at 23% overall. And let me talk quickly about the strong improvement in our profitability. As you can see, the margin improved significantly in every quarter over the last year. Even in the Q4, which was a lower margin than we had in Q3 and Q2, which was due to seasonality, we still were able to post a significant improvement versus the previous year Q4, where our margin only was at 1.4%. The driver of our adjusted EBIT growth was economies of scale, our market-oriented pricing, and also some cost-saving measures and positive FX effects. Overall, as I said before, our adjusted EBIT margin doubled from 2 to 3% to 4.6%. And of course, according our earnings per share before exceptional items came in at 71 euro cent, with 34 euro cent a year before. If we look at the current business year, we expect moderate growth. On the unit sales side, we're now expecting a range between 175,000 and 190,000 DEUTZ engines. This translates into a revenue assumption between 1.9 and 2.1 billion. Our adjusted EBIT margin, on the other hand, we're still a little bit cautious, believe it's going to be in a similar range between 4 and 5% compared to 2022. A strong improvement is impacted on the free cash flow side, but it came in negative last year due to a strong increase in our working capital. For this year, as growth is going to be a little less strong, we expect at least a mid-double-digit million amount in free cash flow. Drivers for this are the solid order backlog that I already talked about, giving us visibility for the first 7 to 8 months. Also, the price increases that we were able to implement last year should have some rollover effects that impact the top line positively this year. But to be fair, we will also have some negative effects. Cost increases that we had to accept last year will also have some rollover effects and impact our EBIT this year. And also, 2 factors will come on top. Energy prices and the new wage agreements that have been signed in Germany with the IG Metall will burden our cost base with a double-digit million euro figure. That is the quick wrap up of our 2022 financial year. Here you can see our financial calendar coming up. I'm happy to talk to you about performance of DEUTZ. Our next data point will be May 4th when we release Q1 figures, and hopefully I can give you an update there. Thank you for listening today, and thank you Seat 11A for having us. Goodbye for now.